Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon, 7 investors, and welcome to 7 Investing Now, live from paradise. My name, of course, is Daniel Brooks Klein. I'm joining you from Key West, and I've got almost the entire 7 Investing team with me today. I've got Dana Abramovitz, I've got Matt Cochran, I've got Simon Erickson, I have Steve Symington, and of course, last but not least, I have Max Chatsko. I am drinking Cuban coffee from the Cuban Coffee Queen, perhaps my favorite coffee place on earth. And it's a quarter mile from where I'm staying, but it's 100 degrees here and humidity like a wet blanket. So I had it delivered. That may be the laziest thing I've ever done. We're going to go around the room in reverse order and talk about what are we looking forward to doing this summer. Now, of course, the main topic of the show is going to be the tech market sell-off. We're going to talk about why we're not scared. I know you look at your portfolio, you see a ton of red, but I promise you, we are in this for the long term. We are here to hold your hand. We are here to tell you why it's going to be okay. We will take your questions and comments. I already see some questions in the queue. Sandeep David, we appreciate the question. It is not a company we are all that familiar with, so we're not ignoring you, but we absolutely, maybe we'll look it up, but it is not one we can talk about today. With that being said, Max Chatsko, what do you have on tap this summer? Pittsburgh summer, so still pretty gray, but what is it you're excited about this summer?
I'm actually looking forward to spending more time with my family. Most of the time I can live without them, but in the last year I haven't really seen them too much. My niece and nephew live close by. I mean, it's my responsibility as uncle. I got to pump them with sugar, pollute their minds, and I haven't been able to do that for the last year. So,
yeah, I'd say R-rated movies, strip clubs. No, I'm kidding. Do not do that. That is bad advice. Shout out to my Aunt Judy, who took me to many an R-rated movie when I was 12 or 13. My parents are still angry with that. Happy Mother's Day to my mom. Happy Mother's Day to my wife, Celine. My mom is watching. My wife is absolutely not watching and will never hear that. Steve Symington, what are you looking forward to this summer?
Oh, man. A little warm weather. You folks down in Florida are spoiled, but no, we're going to actually head down to Arizona. My mother-in-law is moving down there, and then we're going to dip over to Vegas for a couple days, the Grand Canyon, do a little bit of that next month. So that'll be a good way to kick things off. I'm stoked.
Steve, if things don't go well in Vegas, there is a market for children. I'm just saying, my youngest on red. No, do not do that. Simon Erickson, what are you looking forward to this summer?
Well, Dan, everyone here in Houston does what exactly we do when it starts getting hot outside, which is find water. So we're going down to the beach. We're going to spend some time in Galveston and play down there for a couple of weeks.
And Matt Cochran, I am looking forward to spending a little bit of time in your pool this summer and having you over to our community pool as well. Maybe break out a barbecue. But aside from that, what are you looking forward to this summer?
Absolutely. Well, my niece is getting married, and so we're going up to Alabama for the wedding. But then after that, we're getting a lakeside cabin near, not too far from there, in the foothills of the Appalachian Mountains for a week. So I'm looking forward to that, getting off the grid for a little bit.
Weirdly, I am also going to a wedding in Alabama this year. I haven't gotten the invitation yet, so I'm not entirely sure when it is. Dana Abramovitz, I know you are a business person. There's probably not a lot of room for fun. Is it are you going to go get an ice cream cone in between classes or something? What are you planning on doing this summer?
Maybe, yeah. Well, a lot of my clients will go away, so, and school's out, so we'll change the schedule a little bit. So hopefully there'll be some free time. Also, my mom and I have birthdays this summer, so maybe there'll be time for us to get together to celebrate.
Yes, and none of us had birthdays last year. It was all super duper depressing. I have to say, I am most excited probably to get back on a cruise ship. I'm doing that for July 3rd out of Bermuda. But I'm also really, really excited to close on our resort condo so I can be in a setting like this doing shows quite a bit this summer, hopefully. With that being said, we're going to seg over to talking about what happened in the market yesterday. And I'm not going to belabor it, but we had a lot of high-flying tech stocks, Teladoc, Zoom, Fastly, stocks that many of us and our friends have been very high on, stocks that a lot of investors have owned for a long time. And, well, Simon, The bottom came out yesterday. We saw Fastly down, I don't know, 30%, 40% over a couple of days. Really kind of terrifying numbers in the short term. But Simon, can you talk a little bit about what happened and explain the difference between volatility and risk?
Sure, absolutely, Dan. And this is something we don't take lightly. We take it very seriously when you see a stock that drops 25, 27% in a single day. We don't want to make it seem like we're just kind of making light of it and haha, just carry on. But I do think that the important thing to realize is that there is a difference between short-term volatility and long-term capital impairment or risk. If you're investing for multiple years and you know that you're going to keep your money into a certain stock or into the stock market for 3 or 5 years, it doesn't really matter if the stock goes like this or if it goes like this. And so when we see these blips like we did yesterday for several of these high-flying tech stocks, we ask ourselves, is this something that we should really be worried about because there's a risk of permanent impairment of capital that we will not recover our money back from? Or is this just a spot between point A and point C, which is interim point B that we don't have to worry about because it's going to recover again? And so that's how I like to frame things when I look at these companies. Is there something wrong with the business? Is there something wrong with the financials that we should be worried about? Or is this just the market saying, I don't want to pay as high of a price to sales ratio for these tech companies anymore? And if that is indeed the case, that this is just valuation related, then as a long-term investor, you really do not have anything to worry about because the vast majority of long-term returns come from fundamentals, not from valuation corrections.
And Steve Simonton, I'm going to throw it to you because one of the challenges here is separating. People will ask us, oh my God, why did this happen? And sometimes the why is meaningful. Maybe ARK Investing sold out of a position and they sold so much it drags the stock down. But sometimes the why, and the why for Fastly was growth wasn't as fast as people expected and the CFO is leaving. Doesn't justify the fall, but how do you look at this as an investor?
Oh man. A lot of people just one of the big things that I think you need to focus on is my thesis broken? And that's one of the biggest things that I focus on when stocks are plunging. And this happened last March, where we actually, we saw a lot of the positions, we launched on March 1st, 2020, and we released our first recommendations. And I watched a couple of those names plunge 65% in 3 weeks. It was insane, felt insane, but I've seen it before. We've all of us have been there before, and it doesn't feel good at all. But I looked at a couple of those stocks and said, nothing has changed. And, sure enough, a couple of them are, solid triples since then on our scorecard, just for hanging on and for people who actually bought, on some of those by the dip, right? But sometimes you just have to look at it and say, I like this stock for a reason at this price. And sometimes huge drops like that are unjustified. And, I would argue somebody, selling out a stake, ARK sells a stock and drives the price down or something, I'd argue that's not that meaningful. I'm looking at company fundamentals and I'm looking at market capitalizations, valuations relative to the stock's long-term potential. And that's what I focus on. Is my thesis broken? If not, I'll consider just adding and bits at a time.
It's also important to note that stock prices aren't related to reality. It's when you sell a house, your house is worth what the highest bidder will pay for it. And there's a little bit of a game there of, well, is that bidder qualified? Will they get a mortgage? Will it be easy? With a stock, you might sometimes see just a wave of momentum. We saw it this summer with, or this spring with GameStop. GameStop didn't magically become a company worth 100 times what it had been selling for. A lot of people bought it. I've talked about just buying a condo. The condos I bought went up in value by about $20,000 because a lot of people went, where it's nice to visit when we're in a pandemic? Florida, in a resort. Like, that seems great. So the values went up. 2 years from now, maybe everyone will be like, what's awesome during the zombie apocalypse? Skiing in the mountains. And all of a sudden, ski villas will be worth a lot and crowded resort plazas won't be. So it's all relative. Matt Cochran, I'm going to come to you in a minute after talking to Max. I'll let you introduce a graphic or a chart or whatever it is you'd like to do. But Max, you generally invest in much more volatile spaces than we do. How do you prepare yourself for the fact that a biotech company, depending on news, could sometimes legitimately double or triple? Some major approval, it might be worth a huge multiple, or it gets denied and all of a sudden they're back to square one. How do you mentally deal with that?
Yeah, so this is just part of you have to accept the volatility when you invest in early stage drug developers. So again, not to like make fun of what happened yesterday or volatility in the market now, but everyone's freaking out. I'm like, yeah, welcome to the club, guys. Your stock's down a little bit. Wow. Yeah, so it's just part of the long term mindset, right? You're thinking about, again, your thesis. And yeah, there's certain de-risking events that have to happen for drug developers, right? Sometimes it's clinical trials or partnerships or certain commercial milestones. And oftentimes those are far out in the future. I think I brought this up in a recent show, but I started here at 7 Investing. My first pick was September 2020. So I've made 8 picks or so since then, 9 maybe. And the nearest term milestone for any of my companies I've chosen is still mid 2021. So none of them have had any milestones yet. So it's kind of just pretty boring. We're waiting here. So it's a lot of patience required. And a lot of the companies, I'm looking at 2023 or 2024. So it's in a way, it's a perfect way to, orient yourself to long-term mindsets.
And I just had a lizard crawl over my feet. We are not going to think about these salmonella possibilities there. I guess I will not touch my feet and lick my hands anytime soon. We're going to go to Matt Cochran. Then we're going to go to Dana with a little bit of a different swing. And then we'll go back to Simon Erickson to sort of bring up some points and some data on Fastly. Matt Cochran, you've been doing this a long time. You are not scared by a 10%, 20%, even a 40 or 50% drop.
No, I mean, unfortunately, that's the price we pay for great gains in investing. That happens even with like great investments. Like Sam, I think we have a chart. But like as far as like my personal investment in Square, like I bought it in early 2017, and for the first year and a half, it was a phenomenal investment. It went up right away. But for about 2 years, from about late 2018 to mid 2020. It was down from its all-time high. And if you bought like near the peak in late 2018, it was a tough go for almost 2 whole years. But then again, like the stock picked up, like COVID was actually a tailwind for it after like it was feared that it was going to like hurt the business. And, it saw outstanding gains last year. And that's the nature of stock investing. So Square been a great investment since 2017. Fantastic investment. And yet for almost 2 years of that time, so it's only a 4-year period, for almost 2 years of that, it was down from its all-time high. And that's kind of what you almost have to expect when you do long-term buy and hold investing, which I think is still like the best way to invest, the best way for most investors to capture gains. You're going to see times that are very frustrating. Even as the business does well, the stock price will not always reflect that.
So Dana Abramovich, here's how I approach it. I don't look at my portfolio every day. I have to look at it more often because that's kind of what I do for a living. But when I didn't do this for a living, even when I was writing about the market, I looked at my portfolio like when I bought or sold something because that's where I had to go to buy and sell. From an emotional point of view, if you happen to peek at your portfolio and see like, it's an absolute red bloodbath, how do you deal with that from a mindset basis?
Well, so, a lot of the team have been talking about going back to your thesis, right? So like you look at the fundamentals. Is this a solid business? Do I believe in it? Do I believe in the management? And just like sometimes it's hard. Like I tell people all the time. Just take a deep breath, let things go, right? But you got to do that and just kind of move on and just be like, you know what? I believe in this. Oh, sorry, the echo again. I believe in that, and I gotta hold your ground and stick with it, and just realize that the market it's just people, right? It's people and their emotion, and that's kind of driving things, and you can't let other people's emotion affect yours.
We would love your questions and comments. We see a few in there. Simon, maybe address the second comment from Sandeep David while you are making some points on Fastly. We absolutely appreciate you doing that. Simon.
Yeah, sure. And thanks, Sandeep, also for mentioning JFrog. You put up their CI/CD, continuous improvement, continuous deployment. Obviously, data monitoring is very, very important right now. And that DevOps field is trying to break down a lot of those silos, as you already know. Question about Fastly, if we can put that up there, I suppose. I value Fastly on a risk reward. I think it's extremely favorable due to high likelihood it gets bought out. The longer it stays at such a low market cap, low downside possibility of high upside. This is actually something that I presented the idea of back in February. I haven't seen it, so I was kind of going out on a limb of saying I think Fastly does get bought up. I think it got it gets most likely bought by Amazon. Maybe Akamai is on the table too. But I think there's definitely a suitor for the relationships that this company has with very lucrative enterprise customers. So when we're talking about the customer count for Fastly, right now it's only got 336 enterprise customers, right? That's not going out and going after 8,000, 10,000 customers like so many of these companies we've seen. And it's deriving 90% of revenue from those big dogs, from the enterprise customers. But then let's also look at the average sales that it obtains. The average contract that it's got from an enterprise customer a year ago was $600,000. Today, that's closer to $800,000. So these are big fish that are really signing big contracts with Fastly. It's got really, really good retention rates with them too. It's just struggling a little bit in getting involved with the mass market and smaller businesses. And so I still think that that's very lucrative for any potential suitor for this. I think there's a floor on Fastly's stock price. We've probably hit that floor if it wasn't even a little bit higher than where we are today. But I'm starting to dig into what's that relationship between going after the high end of the market versus the potential risk of others competing away from it as they're trying to get more and more involved in edge computing to get closer to those users.
I think it's fair to say nothing changed about the Fastly business yesterday. They didn't come out with some terrible piece of news. They didn't lose a giant customer. Steve, you follow the news all the time, and I'm going to throw to you in a second here. Anybody who wants to talk, just give me like a finger up, because I know we have some graphics and some charts and some things we'd like to get in, so I will try to get to everybody after Steve here. But Steve, in the day of following the news yesterday, I know you didn't look at every company, but is it fair to say it was really just a market sentiment day and nothing changed for high-flying tech stocks?
Right. I think I did peek at my portfolio yesterday after Simon mentioned something on Twitter, and it was down, I think, 5.5% at one point. A single day, that feels painful. But, I went shopping in the process. Like I see a lot of the really high growth stocks, down hard. And, part of the concern, there's so many different narratives that are being thrown out there that they're possibly causing this. And, there was concern over, Fed's easy money policy kind of disappearing. And some of that's abated today because of the worse than expected jobs report we saw. I think a lot of people anticipated that jobs report coming in with at least 1 million new jobs added. It came in at 266,000. Most of those were in the hospitality industry. So now we have the Fed basically has an excuse to keep injecting money into the system. So people are actually encouraged. So, you have the NASDAQ rallying on a bad jobs report. It seems counterintuitive. And then, pivot to reopening stocks. You have all these different things going on. But a lot of those really, really steep declines yesterday were really on no notable company specific news. And, I think at a certain point, a lot of these high growth stocks that were kind of steeply valued earlier this year, they're starting to become pretty attractive again. And I'm going to have a hard time picking my recommendation on the first, by the way.
Sam Bailey, I am going to go to some of the Twitter graphics we have in the doc. So if you have those prepared, be ready. But before I do that, I'm going to go to Max Chasko. Because Max, you talk about valuation more than any of us in our private Slack channels. Are there stocks that you love that you don't buy simply because they've got ahead of themselves in valuation? I'd argue that, with Fastly, it's not like we reopen, we're all going to throw our computers in a river and get an axe and become, wilderness men or whatever it is. Or, Dana's not going to go, move into the country and get rid of her phone. Like, obviously.
That only happens in Montana where Steve is, Dan. Yeah.
Yes. Steve is not wearing his Brawny shirt today, but it is very, very similar. It is one of those situations, Max, where do you sometimes have companies on your watch list where on a day like yesterday, you go, wow, like I just got 5 years back and I can jump in?
Yeah, and it's important too to frame this as, parts of the market I cover, right? So biotech or clean energy, I think in the last year, those have been two of the more bubbly, maybe not a bubble, but, a little more elevated valuations there. So you maybe can't draw too much comparisons to tech necessarily, right? When biotech elevations or when biotech valuations are elevated, there's no recurring revenue to go on, right? People are just kind of pricing in, that clinical trial is going to be perfect. And that's never how it really goes in drug development. So when I'm worried about valuations, it's more because there's so much uncertainty in drug development. but yeah, I mean, I went. I'm all tapped out, which I'm kind of need to wait to get more money in my account. But I did go shopping in the last week and yesterday as well. So I definitely use dips like this again when there's no change in the thesis and it's a solid company. Definitely, went out and added some positions.
Matt Cochran, can Max borrow a few $1,000s? He's got some stocks he'd like to buy.
No, I don't like Max's stock, so definitely not. No, I'm just kidding.
We're going to get to the comment from Mac Lou in a second, the Twitter comment. So I hope you have that ready, Sam. But Dana Abramovitz, we just passed the first of the month, and you made your first ever 7 investing stock recommendation. And I have to say, I was absolutely knocked out by it. We can't say what it is, but you presented on a company I've absolutely never heard of, didn't know it was public, didn't know how awesome the work they were doing. So sometimes there's a stock you buy, and it's not just that you like it, it's that you actually find it like kind of life affirming. I know I personally, and I'll let you weigh in a second here, Dana, I personally don't buy companies I feel bad about owning. Like I'm not going to buy like pollute the earth or tobacco stocks. And I get it. It's hard to figure out who's good and who's evil, but usually you could see who's really evil. In your case, you pick something that is unquestionably good. How exciting was that to share with the team?
It was awesome. I mean, I'm not gonna lie. It was, I like good things. I like people and companies that are doing good things for the betterment of other people. I mean, that's one of the reasons why it was so easy for me to join this team. Just because, like our whole purpose is to help our subscribers. So, just wanted to kind of do that and just love companies that do that.
Yeah, and that's what that's what we're doing today. Our goal for this show, and we've been talking, I don't know, there's probably like 900 Slack messages between us all in the last 15 hours. Our goal is to come on here and say, we are long-term investors. I picked a stock last month, and Simon, I'm going to let you jump on in a second and tell people how to subscribe. I picked a stock last month that people looked at it. Simon looked at it and went, wait a minute, is that a recovery play? And I went, no, this is a stock that got stronger because of the adversity of the pandemic. Sometimes something happens to you. You have a health scare and that forces you back to the gym. In many ways, the company I picked reevaluated its business, went back to the gym, and they're coming out of the pandemic looking like Popeye instead of the 98-pound weakling. That's a weird example because Popeye only has the big arms. He doesn't actually look great otherwise, but I couldn't think of another strong person. Simon Erickson, if someone wants to join, and there's now a cat sitting on my foot that is not my cat. If someone wants to join, how would they do that, and what do they get for their $17 a month or $170 a year?
Well, they come to Key West and have a Cuban coffee with you and get attacked by the wildlife, right, Dan? Isn't that what we suggest they do?
I am so excited once the pandemic is over to do this show with an audience, to have people, whether it's in front of a Starbucks somewhere or at my new condo or whatever it is. And I should also say, one of the things I'm most excited about this summer is at some point I'm going to have all of you down, because for a little while I'm going to own 2 properties a couple miles from each other. Enough bedrooms for everybody. Don't worry, Matt. There is a lock on the door, so Max can't get you, and pull a prank on you late at night. But Simon Erickson, how would people join if they wanted to join 7 Investing, and what do they get?
Sure. So 7investing.com/subscribe is where we would like to welcome anyone who wants to join our service as a new subscriber. Like you said, $17 a month, $170 a year. As Dan mentioned, we are doing something a little different than most other newsletters out there, which is we're being completely transparent about everything. You've got advisors on this team appearing not only on this live stream show like we have right now, but as Dan was mentioning for his recommendation this month, and with everyone's recommendation, we kind of open up the curtain so you can see how we as analysts are sizing up these companies. And we're not just being cheerleaders who are hoorahing and saying, oh, that's a great idea. It's definitely going to the moon. It's going to be a 10-bagger in the next couple of years. We're actually being very objective as analysts on this. We're pointing out the risks as well as the opportunities for every one of these picks. And so it's not just the 7 recommendation reports that you get every month with a subscription to 7 Investing, but it's also access to see our thought process, our research process, us challenging each other as advisors, and even a way to interact with the team. We have a monthly subscriber call too. So if you have specific questions about any of the reports, you get to ask us directly live on the spot on the third Friday of every month.
Our mindset is different from a lot of what you see on FinTwit. Companies we recommend, we believe in those companies, and we've done our homework. We didn't just dip a toe in. In most cases, we've read years and years of earnings call transcripts. We've listened to them. We've interviewed some of the executives, all sorts of things like that. So if you'd like to subscribe, that is 7investing.com/subscribe. I'm going to take the comment from Stock Investor. When he says, Dan, if you could bring that up, Sam, that would be great. Dan, see if the cat will chase away that lizard for you. That's actually what's happening right now, and I don't think the end is going to be great for the lizard. Cats there's a lot of fat cats here in Key West, and I think that is due to the lizard populations. There's also a lot of random chickens walking around. I've never quite understood that, like why there would be wild chickens. Giving you a little peek inside the process. Mike Fee has a great comment as well. We are happy to share that one, Sam Bailey, if you could. The 7 Investing team provides a lot of in-depth insight and analysis that can't be found anywhere else. We are proud to do that. We are so excited. We apologize if there's some audio struggles today. I think our software is maybe hitting its limit with everyone here, and I actually have a pretty good internet connection for Key West, which is rare, but who knows? It has been a tiny bit in and out, so we apologize. There will be a full transcript available probably at some point over the weekend, if not certainly by Monday. With that being said, if you could bring up that Twitter comment I had you tee up, Sam Bailey, our director of marketing. And Mac Lou says, have you ever realized you were wrong about a stock and finally cut it? I guess according to your approach, the loss will be big. And also in days like today, will you add to your conviction? I'm going to start with Steve Symington. Steve, have you ever changed your mind and cut bait on a stock?
Yeah, I've had a couple stocks that I'm not completely given up, but I had some stocks in the early days that I realized when I was a young investor that I'd bought thinking, oh, this has to be cheap, and it's not, right? Citigroup, I think, was one of the stocks I owned back in 2007 or something. And I was like, man, I realized, I think I owned GE at one point, 15 years ago, 16 years ago, I don't know. But, and I realized I didn't know as much as I thought about these companies once I start really digging in. And, that was sort of one of those things where, you're finding your footing and getting your feet wet as a new investor. But I've had companies where I think ICE was one that I actually kind of cut bait on because I'd kind of lost some confidence in the company. It still could be a decent winner. I've held several stocks over the last, better part of the last 2 decades that I've just decided, you know what, that's too much. And there's other obvious cases like fraud, financial issues, bankruptcy, where people have been stunned, by surprising bankruptcies. GTAT comes to mind, a stock I didn't own, but I covered back in the day, where GT Advanced Technologies, where they had unfavorable contract terms with Apple. And one day they said, oh yeah, by the way, we're going bankrupt. And, you're like, whoa. And so stuff happens. And yes, like Max said in that comment, a lot of times it's a big loss. But sometimes it's best just to cut bait when your thesis has been fundamentally changed.
I want to throw this to Matt Cochran as well. Matt, go in whatever direction you want, because I know you have some charts and other things prepared. You're welcome to grab. Sometimes you look at a stock, and even though you believe your thesis, even if the thesis is playing out, sometimes the stock doesn't move. I've talked a lot about BlackBerry being a good example of that, where they totally pivoted their business to a really successful business, but that business isn't a public-facing phone, and no one is ever going to forgive them. They would have been better off changing their name in terms of their stock. It's really a company that doesn't trade based on results. It sort of trades based on past ideas. Matt Cochran, take it wherever you want to go.
Yeah, well, I think the key takeaway for all of that is patience, right? You need to have patience. The famous Benjamin Graham quote that in the short run, the market is a popularity contest, and in the long run, it's a weighing machine, right? I think I might have butchered that a little bit, but I think that's the gist of it. You have to have patience. the stock price, the stock doesn't know you just bought it. Like when you buy a stock, you're like, wow, this is a great bar, it's a good value. It's a great company. It's going to disrupt an industry, whatever the bull thesis is for why you bought it. And you think it's just going to go up from there. And that, I think, has like happened to me like never. Like the day I bought it, like it goes nothing but up. I think I'm down on every single stock I've ever bought, at least in the early days, because it doesn't know. There's nobody rings a bell that says, to tell the company that you bought the stock, so now it's okay for the bull thesis to play out. You have to have patience. It takes a long time sometimes for that thesis to play out, and if you're right, you're going to be rewarded for it eventually. But when you're first starting off, like I think we got a comment from an investor the other day or a subscriber saying like, hey, I just started like investing a month or two ago and I'm down on my stocks, like what to do. When you first start off investing, it can really suck. Like there's no doubt about it. Like I think when I got started investing, like I clicked on a clickbaity ad for a service and it was about the next industrial revolution, which was for 3D printing. And so, I put almost all of my family savings into like a few 3D printing stocks. And that did not go well. But even when you do invest in stocks that go well, like it can take time for the thesis to play out. You have to have patience. And when you first get going and you're actually down lower than the amount of money you put into the market, it can be really, really discouraging. Don't get discouraged. Stick it out. And patience will often win the day.
I'll chime in too on this one. Well, Dan's audio catches back up with him out there, or maybe the lizard attacked the wiring.
3D television. I would argue that we are having some audio troubles. I am not sure. Simon, are you hearing me now?
Yeah, go right ahead, Dan.
So I was just saying there, and I think we're all having some internet connectivity issues because it's happening on all edges. We might be maxing out the ability for this software to go, but it's just one of those scenarios where there are things that everyone thinks is the next big thing. 3D printing, 3D television, cannabis, that are not necessarily the next big thing. Doesn't mean those aren't going to be big markets. 3D printing with space has the potential to be a massive market, but it isn't necessarily going to be there. I know Dana was super excited about 3D No, I'm kidding. I have no idea if Dana knows that. Simon Erickson, you're the leader of the team here. Why don't you close out the thought on how we approach red days in the market or even a prolonged downturn?
Well, I do want to touch again on that question that was asked about following. How do you know when to hold on to a stock? We kind of talk about volatility versus risk. Steve said, obviously there's some that don't work out. Sometimes we get led into the market hype, and the hype cycle is a very real phenomenon that we've seen. I think that this kind of all goes back to the one of the key values we're bringing as stock analysts is the research that we're doing and identifying the right metrics to follow. And if you really have conviction in a stock, it's not just because the stock price is going up or down, or you just say, oh, I'm buying the stock because it went up 10% yesterday. At least I don't recommend anyone does that. We try to find something important related to that company. And so perhaps maybe to close this out by bringing it back full circle to Sandeep's question about DevOps. DevOps is a huge trend that's developing in the market right now. And we've seen several companies try to crack into this developing trend that have done various degrees of success. I'd like to answer the similar question that Steve had of what's something that you cut from your portfolio, which mine was New Relic. New Relic was very important for application performance monitoring, which is basically looking at software code that's running inefficiently. When you have cloud-based software. So you want to go out and you want to make sure that everything's loading correctly, that everything's performing correctly, and see the performance of things like this. And at first it went out there, and the metric that I really like to see was its dollar-based net retention, which means how much are your existing customers paying you this year versus how much did they pay you last year? And that started out, I can't remember exactly the numbers off my head, but maybe it was 135, 140%, very, very high, and operating metrics that showed this business was performing really well and customers were accepting its solution. But it fell significantly over the following years. I think it fell down to 105, 107% as it kind of tapped out with those large enterprise customers. It was missing the opportunity to upsell to other products, and it wasn't getting the bang for its buck, and it left it open for competition from others like Datadog and others that were kind of full stack monitoring that eventually displaced a lot of its solutions and appealed more to mass market customers. So that's just one example of many that are out there of look for the right things when you're doing stock analysis. Don't just say, oh, it's a piece of paper that's going up and down on a stock chart. What is this business doing and how is it performing at the things that are most important? And to be quite honest, I think that's something that all of us as advisors on this team do a fantastic job with. We actually capture that in our reports specifically of what are the metrics that we're looking for and we're evaluating these companies upon.
This is also one of those scenarios where when something bad happens, step back and relax and figure out, did something bad actually happen or did the stock price just go down? I appreciate the whole team for turning out today. Our goal at 7 Investing is to help you build a long-term mindset. And it is days like yesterday that challenge that mindset, but I will point out that twice during this pandemic, we have had pretty big market sell-offs that took roughly from like Wednesday to Monday to recover. So this is absolutely a problem. Sam Bailey, we're dealing with some internet issues here. Why don't you put up our finisher? Simon, why don't you lead through the finisher here?
Sure, great. Okay, so Dan, our finisher today is in 2021. Which business segment do you feel the most confident about? Looks like overwhelmingly out of these 4 choices, we chose the cloud over travel, or our audience chose the cloud over travel, pizza, and gambling. Man, that sure seems like the right choice to me. That's probably how I would have voted. Anyone else have opinions on that? Pizza is a pretty strong, compelling argument, though.
Oh, yeah, definitely the cloud.
I actually think it's pizza.
I mean, pizza maybe during the pandemic, and sure, afterward, nobody's going to stop eating pizza. But I mean, my recommendation on May 1st was a cloud computing play, like a cloud transformation thing. So yeah, obviously, I didn't even have to hesitate when I voted on that one. So
pizza will never be disrupted. Never. Can't go wrong. Pizza will not be disrupted.
$20 for the family, right, Matt? The ultimate dinner.
That's right. Domino's Pizza. You can one click of a button and your saved orders there in a few minutes magically. It's perfect. $20, feed a family of 6. Can't beat that.
And Dan, it's the best pizza, right?
Oh, dear God. We're not going to have that discussion. I will meet everyone in New Haven and we will talk about what the best pizza is, or maybe Boston. We can go to Santarpio's or Pizzeria Regina. It is there is no pizza in Florida. So Matt, being from Florida, I totally understand why he's willing to eat Domino's beyond just price. That being said, Steve Symington, why don't you tell people how they can get in touch with us?
Oh, you can email info@7investing.com. That's usually me that replies to that personally. We don't have bots that handle these. So yes, sometimes it's a lot of email, but send us questions about our service, how to subscribe, what you can expect. Or if you're having troubles, we'll respond there. But info@7investing.com, or you can find us at 7investing on Twitter. We're all very active. Several of us have access to that account, and you can also see our individual Twitter handles.
And Simon Erickson, I'll let you make one more comment and sign us off.
Yeah, perfect. Hey, this is completely off the cuff, and you didn't know I was going to say this, but a huge thank you to Dan Klein. Being on vacation in Key West right now and still getting it done for our live stream show. That's so impressive, Dan. I mean, on your vacation to still make it, you've done a fantastic job with this live stream. I really like the interactive format with people getting to chat directly with us as advisors. So it's actually me thanking you for making the time to be here this morning on your vacation.
We're going to do shows from the Caribbean. We're going to do shows from our new resort place in Davenport. We're going to do shows from cruise ships if I could possibly make that technology work. There is no such thing as a vacation. The joy of doing this is I get to do my job, and I sometimes can do it at 2 a.m. after a night out in Key West. So this is one of those things where I'm going to have a lot of weeks where you're looking to go, Dan is on vacation again. And the reality is Dan is portable. What we do is portable. And I'm very excited. And I think my computer's overheating. I think that is why some of the internet issues. So we might have to explore using some different technology or perhaps a phone on a stand. But for everybody except Honor Bond, who is sleeping, thank you for watching 7 Investing Now, and happy Mother's Day. We'll see you Monday.